I have lived long enough to know that opportunities must be seized or they will be lost.
Welcome back to Wall Street Radio. I'm your host, Tanner Yarton, here with Dan Young. It's the 31st of January, 2025. And in today's episode, we're going to be discussing our research article on DeepSeek, the implications for cybersecurity, as well as the U.S. development of semiconductors, AI models, LLMs, and everything encompassing the value chain there. We're also going to be discussing market action for the week, what we expect to come of tariffs, potential over the weekend behavior, with more news coming out, as well as the discussion of how news is going to play a role moving forward in Trump's administration. We can tell that there's already some faults coming in with Reuters today, making a big mistake and causing a large sell-off in the market. So we're going to jump right in and cover some topics. Enjoy. Really hitting the ground running with Trump's administration and volatility in the market. And that's something that I think both of us expected. I know the pod hasn't been running that long, but coming into this new year, that was a big point of discussion is, okay, even if Trump's market isn't great and sends us to all-time highs or whatever, what there is going to be is a ton of volatility and a ton of action, weekend moves, weekend news, etc. So, and we're getting that already. We're 2 weeks in and we're already seeing a ton of it.
Yeah. In last week's article posted on Sebs, it was about the Trump implications of being president. And a big section of that was the opportunity and the risk, especially around tariffs. The February 1st deadline for the tariffs on Mexico and Canada, as well as the additional 10% on China, I know specifically for Mexico and Canada, is supposed to take place on February 1st. It sounds like there's a rumor that that's been delayed, which is causing the sell-off on the Friday session. It started, obviously, the day started really strong because of the earnings that we saw overnight from Meta, Apple, Microsoft. I mean, everyone was, Team had a great report, even though it's not going to move the markets still. Nonetheless, it seems like earnings reports so far, looking back from Q4 of last year, have been very, very strong. But just the slip of one Thomson Reuters report saying that those tariffs could be delayed makes the market reverse its 4-point gain, and now it's red for the day. So it's interesting how easy that slipped. That just means that we've now baked so much into the market from a potential standpoint of what Trump is doing and putting a lot of his ideas as facts and like fully baking them in, because really Trump came back immediately and said that's not true, and it had no effect on the market. So I think that's just going to be something we have to continue to monitor and play around with, because if these tariffs are fully baked into the market pricing and the market movement, I'm pretty skeptical. Like, I actually don't think we're going to impose those heavy tariffs at the rate at which he's been saying, right? He always does that. He threatens big, and then there's a negotiation on the table. But let's say we negotiate down to 5 or 10%. Does that mean we're going to now drop in the market another 3 to 5%?
Yeah, he's definitely swinging big, but ends up really hitting quite small. And he's really been pulling his punches on these tariffs since he started bringing them up over the fall. And really, I guess, going into his campaign about huge tariffs in China. And now we really haven't heard much about tariffs in China. And now we're hearing so much more about tariffs for Canada and Mexico. And, that might be a bluff as well. So that is a little bit worrisome. Like you said, if the market reacts so much to little changes in those big swings that he's kind of laid out on the table, what's going to happen if they are, like you said, significantly less than the expected, or not even where they're supposed to be? I think everybody was anticipating these big tariffs on China to really kind of get the ball rolling with negotiations there. And now all of a sudden we're talking about North American tariffs instead. So it's just pandemonium. And I mean, we both remember trading during his first administration back in 2016 to 2020. And it was the same thing. I mean, not with the tariffs specifically, but just his global negotiation strategy is generally to cause pandemonium, put these big deals on the table, and then really kind of be tactile and small after that. So I'm not quite sure what that's going to materialize into moving forward, but like we've been saying, I think it'll just lead to more volatility, maybe some more downside if they're not as big as he anticipates them to be.
Yeah, I mean, it's end of month, right? One thing I always love about end of month is it closes the candles off. I always say with trading, you have to wait until the candles close, specifically when you're using the 1 day. I mean, really any candle, 5 minute, 1 hour, 4 hour. But on the 1 month, the 1 week, the 1 day, like the primary candles that I really like to look at for identifying trends and consolidation and where's their upside, where's their risk, opportunity, so on and so forth. SPY's ending at 3% gain for the month. So that's obviously a positive gain that looks good. Over a 5-day, it's still up 1.5%. So it's not like today is completely ruining everything, but it is interesting just to see that how quickly the sea can fall out from under you just from one, again, not verified news report about the delay of tariffs. It makes me a little bit more cautious. It was interesting. I was listening to some interviews this morning about where they're positioning their trades, and a lot are looking at emerging markets, places like China and Brazil. And I also, for some reason, I didn't have my alerts on from Whale Wisdom, but when Michael Burry posted his new holdings from last quarter, he also sold out of almost all of his American positions and entered heavy China speculation. So
Yeah.
heavy Baba Baidu. Not to say that he's even positive at this point. I'm not sure exactly where his positions lie, obviously, but I am seeing that across the board where people are looking for the low PE, high upside, more treating the speculation as PE investments in the market. And I just wonder how long people will be willing to pay these very saturated technology stocks, even with the earnings reports that we saw. I mean, Apple reported very, very good numbers, but at what point does the risk become too heavy because of the saturation in SPY and the risk with this type of behavior? If Trump's going to come out and say a random thing or tweet something, that you're really at risk for your position.
Yeah, that brings up a great point about international stocks versus domestic. You know, as US stocks get more expensive, the deal just looks better and better for the rest of the world, like investing in the rest of the world does, even if nothing's changing across any of these foreign or international markets. Yeah, I've been noticing that as well. On my feed, a lot of the guys that I follow that I really enjoy paying attention to, they're noticing the same trend where they're like, hey, you know, most of what we want to buy in the US market is just to the point where it's played out. Everything's baked in. US versus international stocks, the price that we're going to pay now for US stocks is expecting even more growth than what's already priced in. And what's priced in is quite heavy, in my opinion. Over the last 2 years, I mean, back to back 20+% years on SPY. And while, yes, it is focused, it's focused because the good stuff is doing extremely well. And all the good stuff that everybody wants to own, they either already do or they're starting now to sell out of. And try and find new opportunities. And those new opportunities might come in these extremely well-valued international stocks. So we'll just have to see what that turns into. But yeah, I've noticed a huge uptick on my social media pages of the China trade and what that looks like. If you go back in time, there is an analog to the last time there was a tariff scare on China. You can see a very similar looking chart where you've got analog to price, which is basically two charts or two periods of time overlaid on top of each other with a similar event or even different events, but you can see price kind of follow similarly. And that happened last time we had a tariff scare on China as well. So maybe that's something that follows through and we get continuational moves in international stocks. I think you and I have talked about STNE quite a bit. That's a Brazilian financial tech company that's just been riding the gutter for so long, despite having pretty solid growth. Unfortunately, there's just been no interest in that market at all to drive share price. So what you're getting is you're just getting value compressed. And maybe we see that start to pick up in 2025 and unwind a little bit to the upside.
You know, it's actually funny you just mentioned that because 30 minutes ago, I was running a scanner for the lowest PE, but highest growth potential equities, you know, international and domestic. Stone was up there. They're very, very low value. It's you and me always think about it because of that run it had to that 70-80 range. And that was such a fantastic time to be a part of it. And then since then, over the last 3 years, it's been doing nothing. But it certainly is one that I'm going to put price alerts on in case it gets momentum. That's something we're going to want to see like well into the future. Like talking about international, I feel like we have to talk about, you know, what happened this past weekend going into this weekend and the impact on the AI stocks.
Yeah, I think first and foremost, and we discuss all this in the article, but first and foremost, the figure that was thrown around about how much it costs for DeepSeek to actually run. And everybody saw the first headline that came out, of course, that was like Chinese AI firm creates a ChatGPT competitor for $6 million. And at first you're like, how is this even possible? But as Americans, we're thinking of it from a practical enterprise standpoint. We're thinking about that includes cost of goods, that includes the energy to train, that includes the chips, that includes all these things. But China is operating a little bit different than we are. China has the ability, number one, they can subsidize energy at the snap of a finger across their country. So they have a number of large hydroelectric dams across some of their larger provinces that's just kind of getting flocked by AI development now. And so their energy costs are significantly lower than ours, especially because it's not privatized. Many of the AI firms are just getting direct funding from the government because the Chinese government sees AI as something that as like a national concern. Is I think the way that they put it. So with those things in mind, it can make the price appear a lot cheaper than it actually is because those costs are taken out of the firm itself to create it, and it's just kind of being subsidized by the government. Additionally, the thought was that they were able to make this on chips that were many generations back from the H100, which is the popular NVIDIA chip of today. But after this week, and now more headlines have come out, well, now there's tons of rumors about them having a significant amount of H100 chips. And the two running theories about where those might be coming from, the first one, which I think is less probable, but possible, is Charles Liang in Supermicro getting them over there. There's a number of videos circulating from China that show unboxings of H100s coming in Supermicro boxes. That would be a crazy prank if they just put them in those boxes. But if not, I think the other likely scenario and the more likely scenario is they're just coming from Singapore. If you look at NVIDIA's revenue over the last year and really trailing for the last 9 months, you can see almost half their revenue for AI and data centers is coming from Singapore, which is obviously in close proximity to China. So it's very likely that some of those chips are making their way into mainland China.
Oh, well, that's interesting. I did not know that.
Yeah, it's going to be interesting to see kind of what comes of that further. Again, it's a developing story. We're not sure of all the details just yet. What it does, though, is, well, first and foremost, what it does is it kind of scares the domestic brands that are like, oh, shit, they were able to do this. Even if the prices are even close, they're like, oh, damn, China was able to do this, given the sanctions, given all the trouble that they've had as far as getting the material and the training data to create these models. And what we've seen is now we've seen all the domestic LLMs start to update and release new value for customers. You're seeing Perplexity able to run DeepSeek's R1 now right on the platform. You're seeing ChatGPT come out with a service for government. And I tweeted about this. There were a number of other LLM platforms domestically that are adding value over the last week, trying to kind of keep people on their platform. So while one side of me is like, oh, this is a concern because China is able to create a product for so much cheaper. On the other hand, I'm like, okay, well, this is great. It's scaring the domestic suppliers to kind of add more value to their services. So at the end of the day, competition is good for the market, regardless of where it comes from. Obviously, from a patriotic perspective, I'd like to see American companies be dominating and competing against each other. But this introduction of a Chinese model is certainly spurring a ton of growth domestically as far as giving consumers more options on those platforms than they had even just a week ago. So in my opinion, it's a positive.
Yeah, and then you had Alibaba come out and say that theirs is more powerful than ChatGPT, DeepSeek, and everyone else on the market. So I feel like you're going to see this flood, and it's going to increase in the time it gets rolled out. We are going to see companies left and right come out of the woodwork in the next 6 to 12 months saying that they have the best. And the thing I always think about, and we talked about this, but like, what is the impact to the consumer market? As this increases, and we've already heard things from Zuckerberg and other tech leaders about the replacement of mid-level software engineers with AI and these, large language models by 2026, as early as next year. What does that mean for the market in terms of the health of the economy from an unemployment perspective?
Yeah, this is where it gets a little bit more speculative, but worth talking about anyway. If AI does what I think it's going to do, which is play out to an extent where it just becomes free, kind of like Google search. Like early on in the internet days, these things were considerably more expensive than they are now. Services now that we have for free that we take for granted way back when were tremendously costly to do. I would imagine that as this plays out, the LLM service, at least as we know it, like as the consumers now know it, that stuff is going to be free and it's going to be open source, and it's really just going to be, you're going to go to the one with the biggest data center to search and use as like your task maker and all this and that. Now, from the side of jobs that it's going to take away, I mean, we're already seeing the elimination of software engineers at the middle or low level, because that stuff can just be taken care of by GPT or LLMs. I mean, look at us. We've been able to create indicators. We've been able to create code for the website without having to like in an instance where previously we had to hire somebody out to do that. And we're able to just say, hey, make me this code for this website that's going to include these tickers and do whatever, or create this indicator on my chart to show me, X, Y, and Z. And it's able to do that in seconds. So we're already seeing the evisceration of a number of industries in regards to software engineering, also digital marketing, as far as like website, like we were talking about website creation. And then also on top of the LLM side, the photo generation and video generation, Sora, GPT does have an image generation platform as well with some of the paid offerings that they have. So we're seeing the early stages, the obvious ones that are getting kind of taken behind the woodshed as far as business goes. I mean, even like companies like Chegg and some of these education platforms, we're seeing drastic loss of jobs in those industries. And I think that only continues as we move forward. How deep that goes, I don't know. But what seems probable is we have just a shift away from bloat and corporate bloat. And I try not to throw that word around too lightly because it can mean a number of different things. It reminds me of like the word vibes. But if this bloat starts to get trimmed at the corporate level because these people are just being replaced by AI or AI models, whether that be middle level managers that their jobs can just be eliminated by the use of strategic AI or whatever it might be, it's going to pose an interesting question of whether or not we shift towards a universal basic income, or those people just start to find work elsewhere. They either have to make a pivot in their career towards, I don't know, jobs that just haven't been saturated yet, whether that be more blue collar or what, or they switch towards more entertainment based jobs. Because if you look back throughout history, going back thousands of years, anytime you have economic prosperity or some form of development within a culture or a society that removes the need for a lot of people to be actually working, you look at the early industrial revolution and what that led to, the emergence of entertainers and people just supporting their society from the perspective of individual creation, art, music, sculpture, going way back in history. There was a large emergence. Huh?
You talking about OnlyFans now or what?
No, it's all right. Listen. That might be the needle might have gone a little bit too far there, but in any case, the shift towards entertainment might start to take place. I mean, this could be a wrong line of thinking because now we're talking about technology that can propel us. I don't know, because it's tough. It's really tough.
Yeah, no, it's super tough. It reminds me of when I was going through school. I went to North Carolina State. I got in actually on a scholarship for engineering. I got into the aerospace program. I spent a year doing aerospace. It was actually around the same time that NASA was getting defunded. To me, it did not look like a good idea. So I switched to computer science. At that time, computer science engineering and the program itself, it wasn't that popular. It was like still very new age. Computers and technology as a whole, it hit this new parabolic curve around like 2014 plus. And I think crypto actually had a lot to do with it. But I think about also when I was going through college, and the engineering was the biggest job that you could get. I mean, going through school, at least where I was from in North Carolina, and at that time in the market, it always was the same thing, which was like your parents saying, you like math and science, go be an engineer. They get paid really well. High job security. And I remember I did not graduate in engineering. I went on to do nutrition sciences and more of a medical degree. But I remember all of my friends who went through engineering, all of them got stonewalled after college because there were no jobs open, because everyone and their mother was saying, go be an engineer. They get to the market, it's saturated, and they all pivoted. Some ended up being civil engineers, mechanical engineers, but a lot went into sales focused jobs around those same type of industries, and some fully pivoted to completely different things. I wonder about like the downstream implications of a world where LLMs and AI takes over for these mid-level, entry-level engineers. I pulled it up when you were talking, but there's over 4.5 million software engineers in the US alone and over 28 million internationally. So if you look at the downstream of 4.5 million software engineers, and now think about the money that's been funded into these college programs the past 8 to 10 years, if you don't have that anymore, where do you go? And so, right, you talk about entertainment, and we've seen that for sure with influencers. I mean, we make fun of OnlyFans, whether we like it or not. That is obviously something that is in the market today. Like, what else will come to fruition, and what's going to exist that doesn't exist today that fills this entertainment slot? For example, sports gambling is something that I actually think the younger generations are going to get heavily into the same way that our older generations looked at trading.
Yeah.
I think that they're going to have like a Bloomberg terminal for sports data. I think it's going to be highly competitive, but that's like the type of entertainment where there's still an income based around it. And personally, I don't believe that's healthy, but it's going to be a pocket that's formed in the market because of, again, the downstream effects of this type of replacement of human capital with large language models and artificial intelligence.
Yeah, and then what that does also, let's say we'll use your example, the emergence of sports betting moving forward. What does that do? Not only does it create a lot of jobs and a lot of people that are using it as a source of income, but then also content creators, like more independent versions of ESPN and some of these talk shows that are just discussing about sports and games and lines that are drawn or whatever it might be. So the downstream implications are not only new emergences of markets that younger generations are leaning into to kind of find a source of income where previously that wasn't either allowed because of betting regulations or because there were just other fields that they could go into and get paid more, but then also the content side of it and the independent media side of it. I think that's going to be a large emergence as well. And you and I have talked about this. It's one of the reasons why we started SEBS, is because we think that as we move forward as a society and entertainment starts to pick up as people have less to do just in general, they're going to be looking less towards the CNBC, the CNNs, the Fox Newses, these mainstream, kind of the Disney umbrella, and more towards their favorite independent creator. I mean, I didn't grow up watching CNN and Fox News. I grew up watching individual creators on YouTube. That's where I learned most of what I know.
Yeah, 100, and that's just a shift of a generation.
Yeah.
That there's no way we're going back to mainstream media at this rate.
Nope. And what that means is the entertainment industry is going to get a lot more niche a lot quicker, I think. You're going to see the emergence of new large players for sure, like small independents that have grown and scaled, like what we hope to do someday, are going to grow and prosper and then start to acquire. And you're going to have this whole cycle kind of rebuild, right? Where, 30 years from now, SEBS might be the CNN or whatever the example might be. And then it will restart.
Yeah, exactly.
Yeah.
It's going to be interesting regardless. And I think that's where, when we think about positioning for the market, these are important conversations not only to have, but to listen to. I know Tanner and I both spend a ton of time talking to one another, but also listening to other people and other perspectives about what they think the future will hold for not only like society, but also the markets, because they obviously run hand in hand. And talk about positioning and getting a first step advantage and being able to beat the market, quote unquote, outside of the S&P. You have to ask yourself these questions, like, where are we heading as a market and where is the opportunity sitting?
Yeah.
And so flowing a little bit into where we are today and not, so much in the future. We talked about earnings this week. They came in super strong. I mean, cash flow seems to be very high still with the big three in tech. A name that I've been eyeing, and I've talked to you a lot about it, Dynatrace.
Yeah.
Cybersecurity for the last 3 years has had a lot of my focus. I talked about it last week as well, but like CyberArk, NICE, Tyler Technologies, which again, a little bit goes outside, but there's this defense, cybersecurity, protection of identity theme that I'm really heavy into. And it wasn't because of AI. It's just been their cash flow is really nice. They run very profitable subscription-based models. They have very healthy generation of pipeline for their sales. For me, the culmination and the compounding of this AI effort and this introduction into the market really pushes the cybersecurity appetite for me to an all-time high. And we've seen that recently in the past week or two in the markets, where you see names like Cloudflare and then CrowdStrike. They are making big pushes, not to toot the horn of the positions, but CyberArk is also at all-time highs. Dynatrace is slowly coming around. They also reported earnings that were really positive. But this is something where, when I think about getting excited and energized about investment opportunity, we talked about this, Tanner, last night, where the way I see it is AI and large language models. We've been focusing a lot on the offensive part of them, which is creation. We put in the back stove the defensive part of it. And I think that's where the real beauty and the success will be, is in that cyber technology that is defending against threats created by large language models. Because just as much as we want to think about the creation of things, and we just talked for a whole segment about the loss of jobs because of the creation, there's now going to be a whole open segment of jobs, in my opinion, that's going to be on the cybersecurity front, from hiring actual real people to create and continue to design things that can combat these, malware, viruses, and threats that impact corporations and personal identity and personal bank accounts. That for me is like super exciting to invest in because, as a kid growing up, like a great movie, Swordfish, that's like one of the things they work on is like decoding this massive algorithm and trying to break into this account. And it's always changing its numbers and it's always learning and molding, and they're finally able to do it. But that's the way these large language models are operating now. Like they can change the way they look, they can change their code, they can change their structure in a second. And they constantly do that 1,000 times every 5 seconds. So like creating software that can combat that is where I find, again, the most excitement, the most unknown, but the most need.
Yeah, I must have missed that movie on the Boomer leaderboards, but sounds interesting.
Come on now.
And just to go back to your point about Dynatrace specifically, I think we're going to see a large emergence in businesses that have this gigantic driver from the AI tailwind start to pick up. I mean, it's already picking up, but over the next, I don't think this is like a 1 year and done, like a little pump and dump. I think this is something that plays out over the next 1 to 5, maybe even 10 years. And when you think about their customer base from a large business all the way down to a small business scale, the smallest are not able to pivot very quickly, and the large ones are not able to pivot very quickly. So what we're seeing right now is really the middle of the pack that have, they're large enough to support pivoting and be able to afford it, but also not too large where they would have to completely overhaul systems that have been in place for decades at this point in time. So what we're seeing in the growth in businesses like Dynatrace, I mean, they're seeing monster growth in ARR. I think that's mostly from the middle of the pack. As we move forward, you're going to get some of these larger players, the 10 bill plus market cap companies, start to make that turn as well, away from older platforms and onto newer ones. And I think that's just going to continue that drive in growth. Would you agree with that? That right now we're hitting mostly that middle of the pack and not really the full range of businesses that are getting on these AI driven platforms?
Yeah, I'd agree with that. I'm still hurt by the Swordfish comment personally, but
I'm not even gonna look it up.
Come on, John Travolta, Hugh Jackman, Halle Berry. The cast is amazing.
Wait, that's actually pumped.
So what if it only has 20% of Rotten Tomatoes, right?
20%, dude.
It's a great movie. You got to watch it.
My God, that's not even making the top 10 worst list.
Yeah, but the cast alone is worth the watch.
That is a pretty stacked cast.
It is. Don Cheadle. Like, come on now.
Don Cheadle.
Don Cheadle. But no, I do agree with you. I mean, the more I think about it, M&A, we talked about it last week, but especially when I think about cybersecurity stocks, and you have so many that are getting funding in Series A right now, some that are progressing to Series B. It's evolving so quickly, and some have very particular developments that they're working on. I think the M&A in that space is going to be very, very big this year, particularly. It's got to happen. I think it's a no-brainer.
And I think we were talking about this a couple of weeks ago, but there is $3 trillion just about in PE funds on the sidelines right now.
Yep.
Yeah. And now let me repeat that number, 3 trillion. So not only are we thinking about our normal M&A candidates, which are like these small businesses either poised for growth but don't have the right management, or they are growing and have like a very concise set of products that's easy to pick up by a larger firm in their space or whatever it might be. But now also 3 trillion, that opens the door for some very large M&A spending. I mean, you're talking, I think I mentioned this a little while ago, but businesses like Target, Nike, some of these large businesses that 2020 just crushed them, in my opinion. I mean, these companies that just weren't able to pivot and handle COVID appropriately. I mean, do we see some PE firms that are, looking to streamline, come in, scoop these up, since now most of them are trading well off their highs as far as valuation goes, as far as price goes? Do we start to see some of those get picked up and kind of either taken private and then reworked and brought back to market, or just merged with a company that's a little bit more capable of handling pivots, right? Because I think we talked about this in the OnCloud article, when some of these large legacy businesses are so far removed from who was actually innovating and growing the company now to just this, like I mentioned, this corporate bloat. Do we see those just get scooped up, like taken by the wolves, because they just can't, they're just simply not able to operate without a innovative leader or without a team that is new, young, and looking to kind of streamline under a totally new set of rules that haven't been seen in these businesses for decades.
Yeah, without a doubt. I mean, Tom Bravo is one that, as a equity firm, they're definitely going to take over some cybersecurity stocks. I know they're definitely going to be leveraging into some type of acquisition this year. I would not be shocked if it's a name like Tenable or Dynatrace that I've mentioned before. But regardless, when I look at investments, not only in the future, but also we take a look at this week and what's happening. Okay, so you have DeepSeek coming in, shaking up a lot of speculation and concern with high value tech names and semi names. Whether that's warranted or not, I guess it's still to be determined. You have cybersecurity starting to look really well. But the problem with that is, like, whenever someone asks me, hey, like, what are you invested in? And I give them some of these names, they're like, awesome, I'm going to try and put in a position. And I'm like, that's great and all, but they're up 200-300%. Like, especially like a name like Guidewire or CyberArk or Tyler Technologies. Like, these names are up really, really big. And I have to imagine DCA right now is the 3-letter that everyone should know about in terms of taking positions with this, again, like saturation in the market. I would not be fully entering anything, especially right now where the speculation's at all-time highs. And again, anyone can release any type of report and the market can slip 4 to 6 points. It feels a bit dicey.
Yeah, it always pains me. I mean, you and I have been doing this long enough in the public perspective of people asking us for our opinions, or I mean, for years now. It always pains me that everybody always asks, oh, what looks great for the next 5 to 10 years? Nobody's asking that in 2022. Nobody's asking that in the middle of 2023. They're all asking that when we're just ripping all-time highs after, guys like you and I are already well positioned for these stocks and these sectors, right? Like, my biggest themes that I get a number of questions on: nuclear and power generation, space. Yeah, I'm always getting questions about what I should, quote unquote, I should be positioning in. And nobody's ever asking those questions when the opportunities are the best and the valuations are the lowest. They're asking it when it's all over the news. And, that brings up a good point about DCAing. It's like, if you're going to take singular positions in singular names or even focused ETFs, it's like, is the time to do it when we're just frying all-time highs? Now, that saying, stocks making new all-time highs have a higher probability of continuing to do so than not. But at the same time, you at the beginning of this pod, we talked about value, and it's like most of the value is priced in at this point. I mean, my primary positions being nuclear and energy creation, as well as space. I mean, those are 2 sectors that have just been on an absolute roll lately. So it's very difficult for me to get on a call or talk to somebody or really just have a tabletop discussion about what, quote unquote, I should be buying. And I'm like, dude, I mean, this is not the time.
Anytime you want to signal top, your mom's asking you, what should I buy? Or like my sister, she always texts me like when the market's up 20 points and she's like, hey, like, where should I put my money? And I'm like, now's not the time.
Yeah.
When we were, because for us, it is escalator up, elevator down. And in those elevator down moments, that's when you're buying. That's the tale as old as time, which is buy when there's fear, sell when there's greed. And for me, especially with my names, I know anytime there's a pullback and I run my analysis and what the ROI is on a position at that point, anytime that you have a huge sell-off, especially in the market, that has no direct impact on the earnings and the guidance of the company that you're investing in, odds are you're going to get a discount, right? That's all it is a discount. And you're just hoping that the discount goes back to par value, and then you're already up a significant amount. What's interesting about the market where we are now is we've actually left that. I feel like we were getting those questions. I was getting those questions, and I felt like that was happening a lot in the market like 3 to 4 months ago. And because we've had a little bit of jostling going on the past 2 months in terms of new high, a bit of a drop, new high, a bit of a drop, it seems like now more than ever, there's this hesitancy about where do you put your cash, where do you put your capital. And so, like, moving forward into February, which historically speaking is not the greatest performance month in the market.
Yeah, for
like
seasonality.
Yeah, from a seasonality perspective, like, are you mainly taking it day by day with your trading? Are you looking at a theme? Is there something you want to find like follow-up conviction on?
Yeah, I mean, for me, it's all a matter of momentum and where the strength is actually, like where the money is actually going to. Like, we recently saw a pretty good sized pullback in SPY. And what was doing the best during that period of time was the power generation and nuclear space, the IPPs, because regardless of what happens in the market, spend is going to increase in AI. And I think the market recognized that. And they continued to bid up those stocks despite a sell off in the broad market over concerns of Trump or whatever it might be. Because regardless of who the president is going to be, we still need to spend on AI and we still need to spend on improving our electric grid. So as far as my action goes, is I'm just looking for where that spend is going, regardless of any macro themes that are kind of playing out in the background, right? Because there are just some things in the market that need to happen, regardless of what's going on in the macro. Like think about 2022. One of my best buys of 2022, early 2023 was Costco, which was just holding, just flatlined while the market was selling off. I think it was over a 20% down year for 2022, and Costco was performing exceptionally relatively too. Again, regardless of what's going on underlying in the macro, people still need groceries. And I noticed a nice shift towards Costco as well, away from BJ's and Sam's Club, which helped, of course. But yeah, for me, it's all about momentum and what's relatively strong, regardless of what's happening in the macro, regardless of what's happening in the grand scheme.
Yeah, that makes sense. I mean, I'm at that point too now. Like I have my list. I think in future episodes I'll share my list, and you should probably share like a little bit of your long-term portfolio and like where you think things are moving. I do have to say I'm taking things day to day at this point just to see how the market shakes out, from the response with tariffs to the DeepSeek AI evolution. It's all a bit uncertain. Just know that, the names that you are investing in long term have confidence and they'll have first step advantage, whether or not the developments come to fruition or not. And that's, it's hard to do. I think that's why 95 to 99% of people should just invest in the S&P unless you're involved in a fund that can outperform the S&P. But even that is becoming harder than you think these days. Well, it'll be really interesting to actually see again what happens in the coming weeks, especially in February, as it is a short month. It's a soft month. And we should get some interesting data that's going to start coming out around like really the true state of the economy 1 month into Trump's presidency. A lot of people are calling, again, it's interesting. A lot of people are saying it's been chaotic. A lot of people are saying it's been positive. The reduction of debt, the reduction of costs that Elon Musk is always talking about that he's creating with the Doge department. We'll see. I think there's so much going on right now, and navigating that in the market.
It's noise.
Yeah, I mean, it is
pandemonium.
I only can imagine what it's like if you're an international perspective to say like, what are the Americans doing?
Yeah,
we don't know. I mean, we don't know.
Yeah, and to that point about noise and pandemonium, man, that's Trump's MO. We know this. Like going back to 2019, when I was really starting to get into investing and trading, that's how it was. It was every day. It wasn't like these long-standing themes where the market would just kind of slowly pedal upwards. It was like there was a good amount of volatility in there, and that created obviously a lot of short-term opportunity, like less kind of quarter long to year long swing opportunities, and more just like week to week, like what is this man getting on the teleprompter and talking about for that day. I don't know if you saw this, but I saw a pretty ridiculous stat about Elon Musk and his Doge, since you brought it up, about him saying that we're going to save $4 billion a day with some of the developments in the Doge. I'm not sure how tangible that is, but I thought it was interesting. Nevertheless, I mean, that's huge savings. And I don't know if you've noticed, but many of the government websites have already started to go down, like on the whitehouse.gov website. I mean, they're just gutting the government. And I don't know if you saw as well, but there was something about work from home and just asking for resignation. Like,
yeah, if federal workers aren't back in office by end of week, they have to turn in their resignation.
Turn in their resignation. I mean, that is wild to me. That's going to displace a considerable amount of people. I mean, as somebody who worked in Bloomberg government, I mean, you had access to a considerable amount of data in regards to how many people are working in the government, right? And
yeah,
what do you think that looks like as far as, do those people find other positions in the government? Do they leave the government completely? Do they, hold out on like some weird strike for a little while and then come back? Or what does that look like?
Yeah, I mean, that's where I was going with this, which is I have to get this off my chest. Did you see when they took down the White House page, the message that read on it?
Yeah, go home.
I think it was unburdened by what has been or something like that.
Oh, dude, no, the one I saw was they took down the immigration website and put a big button in the middle that said "Go home."
Oh my gosh, the troll level is it's unfathomable at
And I
this
think
point.
unfathomable. And I think that's what we're gonna get with Elon in such close proximity. I mean, everything he does is wordplay. And I mean, look at like his line of cars, the S, the 3, the X, and the Y. It spells sexy. Like he loves the wordplay and kind of the jokes and the memes. I mean, you go back to some of his earliest videos when he started to get popular. There's like a YouTube video of him reviewing memes with PewDiePie. And you can just see it back in like I think it was like 2017 or something around then. And you can just see he loves the meme. He loves like the joke and to get a little kick out of anything that's underlying that makes people laugh just a little bit. So I'm excited to see more of that personally, just from an entertainment perspective.
Yeah, I mean, we're talking about entertainment being the future. He'll be the king.
He really is.
But going back, that was another thing, for those listeners out there that, a lot of you either know Tanner or you know me, you probably have come through Tanner's network. I highly suggest the research articles are free. A lot of the things that we talk about, we take time to actually do due diligence and think about what the impact of the future market will be. So like, for example, right now we're talking about the impact and the, belief by Trump that if you're not back in work by next week or by the end of this week, right, you're not going to have a job, you're going to be fired. There's a big section in the article 2 weeks ago from leverage to legacy, which is the Trump article. And we talk about, specifically, I cover the government spending and the government contracting world. So I spent a significant amount of time working at Bloomberg. I was running and overseeing, I won't get too much into it, but the federal government and government related products around affairs and contracting and working again with federal agencies and so on and so forth without giving away too much. There are a lot of companies that make a significant amount of revenue and sales to their business through federal government and the spending of federal government dollars. Think about subscription-based businesses like most SaaS companies or any other workflow tool where you pay X amount per seat. So for example, you have an agency with 1,000 people, each of them need a seat of a software. So they're going to pay $500 per head. Now think about that agency that loses 300 people because of the impacts of Trump's return to work policy or just general cutting because of Doge. That has now impacted revenue and sales on a company. And also it is important to note, making up federal dollars is not easy. A federal sales cycle is anywhere 6 to 12 months. So when you're planning to acquire new logo acquisition or a new sale within the federal government, you're doing it the year prior. It's Q4 of the year prior where you're putting together your opportunity pipeline for the following year. So if people are doing that last year for this year, and now they're having to plan for a tremendous loss of business because of a reduction of workforce and therefore a reduction in seat and headcount, where are they going to make up those dollars? It's probably going to be in the commercial space. So for everyone who wants to do due diligence and you think about what companies, when should I take investment? What companies should I look for investing in? I mentioned this in the article, but a really important thing is look at the revenue production of the company you're investing in because it's going to be public. Listen to their earnings report. Try and determine how much of their revenue is from commercial versus government or federal. If they have a significant amount of federal business, I would be putting the brakes on a little bit.
Kind of tangentially to that, with the government reducing spending, do you think that we're going to see not only a reduction of spending on some of these SaaS companies, like you mentioned, that get paid per head, but also with now Trump in office, he likes to be involved in global politics and in meeting with other leaders and trying to cull threats. Do you think that spending of defense and like military contracts, do you think we're going to see a reel back on any of that as well moving forward with this new administration?
No, I would say that's where we're going to see. My bet is that we see an influx of dollars into those areas. So,
Okay.
Yeah, when I'm looking into that section, I'm looking at Lockheed's and Northrop's, Booz Allen even. I'm bullish on those. Any type of government contractor that's doing business for terms of intelligence or military capacity or output, that's something that I'm not too concerned about. The things I'm concerned about are more of the softer side of the SaaS world, which is like commercial workflow and project management and sales. Yeah, exactly. Like those are the ones that are going to get cut pretty bigly because those are probably going to have the biggest impact from a reduction of workforce, because those people, like for example, IRS agents, like a lot of IRS agents work remotely. If they work remotely, the tools that they're using aren't really going to be provided by the Lockheeds and the defensive worlds. They're actually going to be provided from the Bloombergs and the Thomson Reuters and the Wolters Kluwers. Like these are names and brands that provide to government agencies. So that's what I'm looking. So I'm looking for, these commercial companies that provide workflow tools, not from a military perspective, because I think we're going to see a large transfer of dollars back into defense, home security, things like that.
Yeah, that's a perfect segue. I was just going to talk about the defensive, the homeland security. I called it I can't remember what I called it. I had some stupid name for it, but like the immigration trade, which is GEO jails. It's one of the largest jail complexes in the United States, privatized. I believe they have over 15,000 acres at this point of jails, as well as Byrna Technologies, BYRN, which is self-defense technology. They make like less lethal products. So gas canister launchers and whatnot, as well as OSIS is our favorite from back in the day. The screeners and Axon. They used to be TASR in the early 2000s for any of our older listeners who remember that big run in 2003 with the launch of the Taser. But that company has been performing exceptionally lately, still pushing all-time highs despite market kind of giving some pushback, because there is a notable amount of funding going into that to kind of handle deportation and defense at the border. So that's where I was expecting some money to go. I wasn't so sure about the Lockheeds, and that's why I was curious about that.
That's where I have my gut right now. The price will show us which way the market's moving. For me, my personal interest, and again, my professional background, looking at government contracting and knowing the flow of money and how those opportunities are acquired from companies and how much they mean to their revenues, it is something that I'm eyeing. And I think people are going to be caught with their pants down from an investing standpoint if they don't follow it and they don't understand it. Certainly something we'll talk about in future episodes. I'm probably going to put out an article, hopefully about once a month, that dives into government contracting and who's winning, who's losing, what are the biggest impacts year over year, which obviously can help you position for the future and can give you good insight on actually what's happening. But I hope everyone enjoyed the pod. Tanner, you have anything else?
Yeah, I was just going to roll out with all of our socials again, just to kind of let everybody know. So we are both active on Twitter. It's at Tanner's Trades for me, at the Clampshanks for Dan. We are now on YouTube, so at Wall Street Radio on YouTube. If you're more of a YouTube enjoyer and you want to listen to it there, you can. We don't have an office yet, or like a studio yet, to record these in person, but that is something to look forward to as the year progresses. Hopefully we can get some either we record with video screen and green screen in the background, or an actual in-person office. So look forward to all those things. Check out the socials for more. The newsletter is obviously at Sebs on Substack, and we're releasing Sunday and Thursdays. But that's all I've got.
Sounds good.
See ya.
Now watch this drive.